No.
Okay, so the screen's coming on right now. So welcome to the 15th of June. This is going to be a training session on the impact trading system. All right, we're going to focus on one of our four components called the Isnipe. I am going to record this so everybody knows, so that other members who couldn't be here can listen to it. We have a private set of videos on the YouTube channel that are only available to those that I give permission for, those that are members of the room. So I will give you guys access via email permissions through YouTube to have access to watch this and several other ones that will be similar to this. Remember, we have a four-component system. Okay, we have an Isnipe chart, which is made to snipe between 20 and 40 points. That will be the system on the left here. This system, it's on a 10-4 Renko chart. The system on the right is iStructure, and it is a chart that is a 1 minute NQ chart. Both systems are geared off of structural setups that have been back tested. The system on the left is designed to give us 20 to 40 points. The system on the right is designed to give us 50 to 100 points. Okay, we have about 15 setups on iStructure, and on the Isnipe we have the same kind of 10 repeating patterns or so over and over and over again off these lines that are supporting the resistance zones that are actually ATRs. So again, I know that some of you are not familiar with everything and some of you are already familiar with everything, so I'm going to gear this towards everybody on the call. We'll try to talk as quick as we can to get through this on Father's Day weekend, but we will also focus mainly on Isnipe. I will reference occasionally the iStructure chart because we use them for confluence, while the Isnipe chart is designed to give us 20 to 40 points per trade. The iStructure is designed to give us 50, 70, 100 points per trade, and if we can find confluence between the two of them, then in the ATM setup that I'm going to show you over here, if you have a third or fourth target in that ATM trading strategy, we try to let those last one or two lots or those contracts continue to run in the direction that the iStructure chart tells us that we're going, so that that 20 to 40 point trade over on the left hand side here can turn into maybe a 40, 50, 60, 70 point trade. And I'll show some examples of that. Remember, we also have NAVDAR, which is our predictive time and price cycle methodology that goes with this. And that is something that we know that we have a little bit of insight into the Wall Street algorithms that the NASDAQ and the ES trade off of. There is literally 200 to 300 years of data points within these algorithms going back to the beginning stages of the stock market and trading overseas. We also have on the right hand side price targets that are based off of 12 years of data that we literally track every single day for 12 years. And it helps us to find certain price points that, based off of a daily ATR, for example, that the price might move. So when looking at the left-hand side here on Isnipe, I want you to kind of think about, obviously it's a lot of spaghetti on the wall. We need to learn to train our eyes to see the forest through the trees. And depending on the kind of day that we have, whether we have a low volume, low volatility type day, we may have to change our price targets that we're looking for getting out here. As the 1 minute ATR goes from like 5 to 6 to 7 points per minute, and maybe we jump to 10 to 12 to 15 point per minute, we may have to adjust our targets inside of our ATM. I'm going to talk a little bit about that today so that everybody's very clear on how to make profit on slow volume days, low volume days, or versus high volume days. I always track a 1 minute ATR, and I always track the VIX. We always want to pay attention to if the VIX is like over 17, 18, then you're going to see a 1 minute ATR be over 15 also. And sometimes you're going to get to the point where we see high volatility, whether it's news, FOMC announcements, Treasury announcements, PPI, CPI, any of that kind of stuff, world events, political happenings, creates the VIX, makes the VIX, start escalating. And as the VIX gets higher, the stocks go down. There's an inverse relationship, but they can ping pong prices pretty significantly once the VIX gets above 18. If you don't really follow the VIX and you just want to look at a 1 minute ATR, try to always track. If you're over 25 points a minute, I just suggest you don't trade, because that's when you get those violent pops that can just pop 20 to 30 points. They usually still kind of hit structure, but it happens so fast it's hard to stay in. So just kind of wanted to put that outlier out there, that there are conditions that we may need to change the rules that we listen to. So let's get into the rules. All right, the rules are very simple. And Ron, I know this is brand new for you, so just bear with me. But this is ice sniping for dubbies. If you listen to what I have to say and you follow the rules, this is a back-tested 78% win rate system. Okay, sometimes it'll go down, to low 70s. I've seen it in the 60s every now and then, but a lot of times it actually can go up to 90, 92%. We have a couple different patterns that we use. We have a more conservative pattern and we have an aggressive pattern. And then inside the conservative pattern and the aggressive pattern, I kind of have two phases where I will teach you to be more aggressive as your eyes and your brain and your hand that's hitting the mouse, buy sell button, get better and better at working together. But for everybody in here that's starting off, I suggest that you follow the conservative rules. And this is what I usually say. Trade sim, okay? And when you can show that you can use this system and be successful 5 out of 7 days, then we'll go to using micros. Depending on your pocketbook and the size of the account, different people trade differently. Some people are trading prop firm accounts, 25, 50, 75K accounts. Others are doing 150, 250K accounts. Other people have their own account, so they're not worried about prop firm stuff and issues with prop firm, and they trade their own money. But regardless, when you're learning, no matter what size account you are, you do the sim for 5 days, 5 out of 7 days, give me a week, maybe 2 weeks, depending on how it's going, to learn the system. And then we go to a 3 micro system. And then once you graduate from the 3 micro system, where you have 3 lots, you leg in and leg out, and you have 5 days again that are green out of 7, then we can increase you to maybe 6 lots, 10 lots. And my rule of thumb is for every $1,000 that you have to play, you're authorized to use 3 micros. So if you have a prop firm account that has a $5,000 intraday stop, that's really, it's a 150K account, but you're not really getting 150K because you can't risk more than 5,000, because if you lose more than that, then obviously you've lost that 150K account. So in that case, $5,000 intraday trailing stop times 3 micros, right, would give us a total of 15 micros that you would be able to use. And that's how I do the math, to try to gauge how many micros to leg in with to begin with. Now, the conservative set of rules, all right, says that we do not trade in the first 30 minutes. Now, the times I'm going to give you and the times you're going to see on the charts are going to be my time in Seattle, which is Pacific Standard Time. So for anybody else, Mountain and Eastern, right, you guys convert it to your own. So when I say 6:30 RTH open, that's 9:30 Eastern. So the primary times that I say that you can trade is between 10 and 12:30 Eastern, 7 and 9:30 Pacific Standard Time. The reason we skip the first 30 minutes is because it gets very volatile at times, and you can blow your money. And if you're down $2,000 in the first 30 minutes, then you're struggling all day to try to make that back, and maybe 2 days. Our system is designed to give you, on average, 20 to 35 trades a day, just on the Isnipe system. If you can have 20 to 30 trades a day, then we're not worried about not being able to trade the first 30 minutes. I want you to learn and listen the first 30 minutes as you come in. Now, the other thing about having 20 to 35 trades a day potential is that we don't let fear and greed control our decision making. We don't have the fear of missing out. We have a set of rules that we follow that we know we have a 78% win rate, so we don't have the fear of not taking the trade. We don't let greed dictate, oh, I missed that trade, so now I have to chase it. Or, man, it's a slow day and I'm only getting 10 to 15 opportunities, so I'm going to start taking some of the trades that I see that are outside the rules of what phase I'm in, those conservative rules. If you stick to these rules, I promise you, you will have the ability to pass most of your prop firm accounts within 30 days. Okay, that's just the trend that we see. We have had many examples of people passing it in a week, 2 week, 4 days, and even one day. We had 2 weeks ago, Matt in our room had bought some of the new 250K accounts from Apex, and he passed like 10 of them in one day. He had over $17,000 in a day. You can see that in our trade room. Okay, when you go look, if you want to see some of the results that we do, then what you basically do is you come up here to the trade results room. I don't let anybody take pictures unless it's 50 points or better, or pictures of their certificates of what they've passed. But you'll see, specifically for anybody who hasn't been in this room, that there is picture after picture after picture of showing how we are making 50-point plus trades that equate to thousands of dollars. Even if just using the micro, you can make thousands of dollars a day with this Isnipe system for dummies. So take a look in here for some of the test results that we show and picture results showing trades that other people are taking besides just me. Now, we have something called the slog time frame. After the European close at 8:30, all right, we don't have both the European market and the U.S. market operating at the same time, so everything slows down. So it starts after about 9:30. We're going to really get into this period of time called the slog, where Wall Street guys on the East Coast time frame are going to take their lunch. 9 o'clock my time, 12 o'clock their time. So sometime between 11 and 1 or 1:30 their time frame, they're at lunch, and things kind of slow down, get a little more choppy. If you've made profit in the morning off of this system, then either don't trade after you make your daily allotment, or you start trading half size only, or if you were trading minis before, you switch to trading micros. We have a rule in here, not a rule, but a guideline that says, hey, we would like to shoot for making 1% per day. 1% per day. If you make that every single day, will give you the ability to be probably in the top 3 to 5% of all traders in the world. If you can just have risk management to make 1% a day. Now, I don't know if you guys have seen this kind of calculator, but I put this in here last night. If you go into the education room, all right, I put a link to a daily compound interest calculator. And so just for a point of reference, if you were to put in here $10,000, okay, as your starting value, now you may not be able to see that, so let me actually click on this so you can actually see what it looks like. Everybody see that right there? You can input in here, and you can say, if I have daily $10,000 to start off with for my account, and I have interest rate, a goal of making 1% per day, and I trade 20 days a month, which is about 240 days. We'll just put in 220 days. 220 trading days a year, all right? And we calculate that, all right? That's a future value starting off with $10,000 of $89,000, $79,000 of interest. All right, if you have an account that's $25,000 and you're making 1% a day, all right, that's going to take you up to 223 at the end of 1 year. So you can see that the numbers are very specific. If you are very impressive. If you just keep your profits at 1% a day and you keep adding to them. So that's the other reason why we don't want to let greed take over what we're doing, because we want to be able to just say base hit after base hit after base hit using the system will get us where we want to go. And if you can pass your accounts in 1 month, then you're going to start making money the next month. So stick with the program, stick going slow, and let's just stick to the conservative rules until you're ready to go to the next phase. Now, I'm going to start showing the slide here, but I just want to make sure that you guys are very clear. After 7 o'clock or 10 o'clock Eastern, we're taking what we call the first touch or first pullback rule on any line that's on my chart that is labeled 15, 20, 31, 35, 45, and 60. All right, we actually have a 75 and an 80 line that you can use as 2, but the backtesting results on those are not quite as prolific as the numbers you see here. After 10:25 Eastern, you can start taking the first touch of the 10 line. We do not take touches of the 4s and 6s, which is what I will show you here in a second, unless we have a very specific setup like off the ace trade, or I tell you based off of what I see with iStructure and the Navdar system that you may want to take that trade. All right? So that's our rules. First touch is the 10, 15, 20, 35, 45, and 60. The 4s and 6 only if I give you the guidance specifically live during the trading day to take that. Once you graduate from the conservative rules, we will start looking at and teaching more about a first and second touch rule. Okay, but we're not going to go over that today. I just want you guys to have the basic understanding of how to do this profitably the first time you do it. Now, in order to take these first touch trades, we set up an ATM. Our targets on the ATM to start off with, and I'm going to give you some caveats as we show the screen today, is 8, 10, and 12 points. So if you're using 3 micros, you're going to take off first target at 8, first target at 10, first target at 12. That's points. Your stop is 12 points. 12 points. And that's it. No dollar cost averaging initially. All right? So let's get into the action here. Let's take a look at some trades. We're going to go back to, let's use Thursday for an example maybe. And we're going to go line by line. If everybody has a piece of paper, I'd like you to get out a piece of paper and a pen. And I want you to help me track the actual results of these trading on the 13th, and we will post them. Okay? It has been slower, okay, during this trading week in general because it is in the summertime. And when summer months are here, the movement, even in the NASDAQ, gets reduced a little bit. And so we may need to change our ATR based off of how many points per minute we are going. If we are seeing on average 10 points or more on the ATR, then a target of 8, 10, and 12 works fine. If you start getting sub 10, like that 5.5 to 7 area, we may need to adjust this. And I'm going to show you why we may need to adjust this. Let's look at 7 o'clock. I will also go more over with some of you people who haven't heard why we don't trade in the first 30 minutes. We have an understanding of the opening bell and what happens with market orders that have been resting overnight when they open, why we don't take trades after before the first 30 minutes. And we have something specifically that we talk about that's called the spill. All right? And the spill is something that is a partial remaining movement of the market that occurs from the close of the prior day. But again, that's too much to get in today. Today, I want everybody to understand how to be profitable because several people on here have been practicing it and they're having a little bit of difficulty with really getting in at the right spot and legging out at the right spot. So let's look for a 7 o'clock time frame. Okay, on my chart right here. Now, for those like Ron, you will see lines. Okay, price is the color-coded candles. You'll see support lines below us. That is the paddle that we're looking at. You'll see resistance lines above us. The lines that are below us are usually like whites, blues, and greens. That usually means strength or support below us. Points where we will bounce off of. Points where we will want to go long. The orange, yellow, pink, brown, cream, purple colors above are the bear lines. And if you have any question about what size the line is or whether it's bullish or bearish, you can look over in the right-hand column and see its name associated with the line. If the line has ended over here to the left, you're not going to see its nomenclature for that line in the right-hand column because it's gone. It's disappeared. It's not a factor as much anymore. And the reason we don't put them in the middle of the screen where the line ends is because we don't want it to interfere with price when we're looking at price. So if we come here, rule number 1, we're looking for at 7 o'clock, what line? Somebody tell me the first line that we can look into at 7 o'clock. Anybody?
The 10.
Okay, that's not correct. Why, Bill? Because it's not 725, right?
Oh.
For your very first phase, for conservative traders, you can't take anything but the 15 and above at 7 o'clock. So nothing before 7, 15 and above at 7, and then once 725 happens, then you start taking the 10. Now the reason that you can start taking the 10, the reason I put that rule in there is because of the Navdar time cycle rotations with the algorithms. We will get flushes between 7 and 725 that will shoot through the 10 line. So I'm adding a layer of cushion, conservatism, for you guys not to get eaten up on the 10 line until 725. Now that is almost an hour of waiting to not take, 30 minutes of not taking anything and 55 minutes of not being able to take the 10 line. And you're going to sit there and go on for the first couple of days, well, it hit the 10 line and I want to take it. Well, I'm sorry. That's just the rules that I try to give you in order to make you successful. And if you trust me and you trust this system and you have a little bit of patience at the beginning until you start to see how the cycles on the NASDAQ and the rhythms develop and move, you'll start to get a feel for yourselves and understand that. Once you get that understanding, we'll move you to the second phase and you can start taking some other opportunities that you can trade earlier in the morning before 7 and taking the 10s before 725. But again, I ask you, if the market is open from 10:25 in the morning, when you can start trading the 10, because 6:30 is 9:30, right? So you wait till 10:25 Eastern. You still have all the way to 1600 to trade this system. That's hours and hours and hours. Now, there is a sweet spot for all trading. And the sweet spot for all trading, in my opinion, all right, is up till 30 minutes after the European close. So that's 9 o'clock Pacific Standard Time, 12 o'clock Eastern. 30 minutes after the European market closes, that's when the slog, S-L-O-G, time frame occurs. It's when people go to lunch. It's when it becomes more choppy. So what we want to do is get to the point where we can take most of our trades, the better trades, maybe with more contracts, up until that 12 o'clock Eastern Standard Time. After that is when we have to reduce our risk, trade half size, trade not at all, go from minis to micros. Now, I want to put a note out there. I want to talk some point in time today. There have been some people, because I pushed trading micros to start off with, there have been a lot of issues with Apex, with Rhythmic, and Trade-Evate, and the trade copiers, and people have had, Night Owl and some others have not actually been able to trade the micros because the data is so off or so delayed. If that is the case, I want to mention something at the end here a little bit about how we can still trade around that situation. All right, but let's just get to the rules so everybody understands the rules. So, pen and paper. When I look at the starting time frame of 7 o'clock on my chart, I'm looking for the first 15 bull or the first 15 bear line. The lines are equal. The skinnier the lines that you see, the smaller the numbers. So, for example, on this chart, all right, at 7 o'clock here, we see that we have here the ending of a bear 6 and a bear 4. The yellow is the bear 4. This orange is 6, bear 6. And this is this magenta fuchsia bear 10. They end. And I go from a red background to a blue background just briefly. What makes the backgrounds change is the 6 line. So if I see this orange line end, like I do here, the red background ends. And when I see the blue 6 line develop, the blue background appears. So the shift of the 6 line is what is giving you the change in color of the background. We don't have to trade just off the color of the background. It's just an added point of emphasis for understanding shifts in price action. That goes along with color code changes in the color bars, in the candles. This is a 10-4 Renko chart. Now, when you come in here, I'm looking. Forest through the trees. Where's my first paddle that the ball can bounce off of? Now it is the first 15 line. So below me, after 7 o'clock, okay, where is the first 15 line that I could trade? And above me, where is the first 15? So above me, the first 15 is if I go 4, the yellow, 6, orange, 10, pink, 15. So now my eyes gaze to where's price? Where's the first touch of a 15 line? And today's a great example of where you're going to not have a lot of trades first thing in the morning. Because this 15 line doesn't get tagged to all the way here, 729. Now the first color of the 15 over here, we go for the 4 is the opposite, is the bull line. The blue is the 6. Okay. The green is the 10. And then this blue line here, which is actually above this most recently developed 10, is actually a first touch of the 15. When we enter a trade, we have something called Bill Williams fractals. Bill Williams fractals develop with a dot above or a dot below the most recent candlestick, high or low. They are telling us that price is reversed in a certain direction. So in this case, when I see a green dot up here, that means price came up and bounced down and away from a bear line. We want to see for an entry not only the first touch of a line, but we want to see a fractal develop on the line that is the first within 3 points of the line. All right. So as the line comes down here to this first line, is this a valid entry for me according to my rules? Well, it is the first touch of the 15, but I do not have a fractal within 3 points of that line. It goes shooting through the line. It's slicing through the line. So we know that that is weakness. We now see a shifting of red in the background. So our minds are going, oh, red candles, red background, dangerous. Red over red, you're dead. Okay? You're going to start seeing potentially some big moves. Now, I'm just curious over here at 7:10. Let's look
Crash,
at
is this Friday?
this is Thursday.
Okay, thanks.
This is Thursday, the 13th. Date's down here in the bottom left,
Gotcha.
just so you know. But we'll go over a couple days here just really fast, just trying to get through the rules. So now, I can't trade that. That's the first line. Can I trade a 20 or above line, the next line coming down? Yes. So by my rules, here is a fractal that developed on the next line after the 15 on the Isnipe. I'm looking for the next line above me, which is the bear line. I can't take the 10, so I'm looking for the 15. I'm looking for anything greater than the 15 that gets touched first on the bull side. So here's an example of where you have to be able to read the forest through the trees and have things make sense. This spot right here was not tradable. No fractal on the line. This spot right here, okay, write down number 1. Line number 1, valid trade entry. Yes, I get a fractal on a line greater than the 10 after 7 o'clock. The rules that we go by in order to consider the trade a valid trade for us is, does it move from a line price away and go 10 points? I have to have something that's black and white. If we get 10 points out of a bounce off of one of our lines with a fractal that's developed within 3, then that's the black and white rules where we will say valid entry, valid trade. In this case, not valid trade, not valid entry. In this case, valid trade entry. Let's see how many points we move from this fractal up to the tip of the candle. 6.5 points. So that would be considered a valid trade entry, but not a valid trade for us, meaning it did not work out the way we wanted to. We did not get at least 10 points. So there's number 1 hit against our 100% accuracy. It drops us down to maybe 78%. So now I'm looking for the next first touch of a line below that one. I'm playing ping pong. As the ball comes to pong off of something, I'm just looking at the next line in order, the first touch. Here we go. Next line in order. We get a fractal that develops on the line. That is a valid trade entry. Does that trade bounce and move at least 10 points? Yes, it goes almost 16 points. So trade number 2, put on your piece of paper. Track this, because I'm going to have to ask you guys at the end to give me the total results. Okay, trade number 2, valid entry, valid trade, and we get, all right, 15 points out of it. So just put in the right-hand column.
Crash, is the rule to enter at the line then?
Yes, and I'm going to get into the example right here. So if we enter right here, now this is where it gets difficult for people. This is the exact place that causes people problems. If we were going to set up an ATM, okay, our ATM, this is the most important point for you guys that most of you need to learn today. Okay, so we're getting it right off the bat. Stop equals 12 points. Okay, target 1 equals 8. Target 2 equals 10. Okay, target 3 equals 12 points. This is the most important point. All these numbers that you're setting up in your ATM has to do with where the fractal or the line is. Okay, not where you enter the trade. What I can only control is a set of rules that give you black and white statistics. What I cannot give you is how quickly you can react between your eyes seeing what's happening and your brain telling your hand to hit the buy button. Okay? So I'm going to zoom this out just a little bit. So let's say you see price come down. You see it starting to bounce. Okay, so that's a good indication we're getting a bounce off of this line. Remember, this fractal, though, does not develop until this second candle closes. Right here. See this? Let me spread this out just a little bit on this particular one. This is the point that everybody needs to get today. Those that have been here for a little while. The second candle is this little doji skinny thing right there. You see that? When that second candle after the bounce, so we have a little candle with a wick that comes down and tags it. When that second candle stops right there, that is when the fractal actually develops. So what is that? When you see the fractal develop, and why are we waiting for a fractal? Why not just hit it on the line? Because we don't want to get sliced through. In our system, we have enough trades that we'd rather just get 3 to 5 points, 10 points, as opposed to something slicing through us with a stop to 12. Remember, our stops are now at 12 points from this line. Okay, so it would be somewhere down around here. Now, we have a saying that says, learn to earn on the turn. And by learning to earn on the turn, that prevents us from catching a falling knife. That's what keeps us from getting destroyed when everybody else tries to buy and it continues to slice against them. But this may happen fast, so it's still hard for us, even seeing a reversal with a fractal that confirms the change in price, shows the bounce. That's still hard for us, particularly in this particular case. This is why, starting off in today, I wanted to go into this. Because now, let's say some of you see the fractal, but you don't actually get into the trade, okay, until your eyes can process that, and now you're getting in up here. So now, where have you gotten in? Our entry says, within 3 points of this line, you want to get into the trade. All right, but you're not getting to here. So now the difference from the line or the fractal to where you're actually getting in is now, in this case, 5 to 6 points. If my first ATM structure target is at 8 points, then now, by the system, you need to be legging out 2 points from that. All right, so now we go from here, modify just the drawing to 8 points, okay? So at this point right there, now you are supposed to be legging out of your first ATM strategy, target number 8. But that's only 2 to 3 points from where you got in. So if your ATM strategy says get out at 8 points and move your stop, now here's the other rule for those of you who don't know it yet, is that once you leg out of 8 points, our stop goes from a minus 12 to the line or to the fractal. Okay, and this is where some confusion has gotten in the past. Well, in my talking, I had said, okay, there's 8 points, bring your stops to break even. Well, people's entries were up here, okay? So then they would bring their stops up to break even and the price would just dip down just a little bit, stop them out, and then continue in the direction that we thought the trade was going to go. And they were not, ended up having very successful winning trades because it would go 2 points, come against them, and stop them out. When I'm talking about stops on this ATM, that is from 8 points from where the fractal developed. Now, sometimes the fractal is just below the line. In that case, then I would take my stop, okay, and I would move my stop from minus 12 to, let's say the fractal was right here, right below the fractal there. If the fractal is, in this case, right above the line, then I'm probably going to put my fractal, my stop, right on the line, right below the fractal. Now, every time you see a line here, recognize that the price of that line is actually written in the same color on the right-hand side of the screen as your current line. So in this case, when you're buying this, now granted we're left to time is off to the left, we've already passed this, so you're not seeing the color over here for this particular line. But you could see that it says 19,592 in green. You just take where that line is and basically add 10 points to it. And when you see price hit that 10 points from that color-coded bar, okay, if I was bouncing off of this bear 31 and I'm coming down, right, I would just go, hey, what's 10 points from 24? Okay, that's 14. When price ended up hitting 14, I know I'm bringing my stops to break even, or in more precise language, to the line or the fractal that you got in with. Because you're going to see that many times, I'll show you some examples, price will bounce up, come back and retest, because the algorithms know where fractals are. They know where the last price is. They know that after bounces, people move their stops up, and it's always a back and fill type situation in the market because they want to take out stops. They want people to come buy this, think it's going to go zoom up, and then they just do a quick little retrace, get those stops, and then continue with the trend up. And so we're trying to avoid that. And again, 78% of the time, if you follow these strict rules on the first touch, you will protect yourself from getting stopped out too early. Now, if you get stopped out and you only got 2 points and it came back against you, okay, that trade is over. We have a very hard, fast rule, and I've talked to many of you in this room individually and privately. A lot of people that haven't been having difficulties have it for 2 reasons. This first reason right here, because they're not legging out at 8 points. They're trying to go 8 points from where they bought, but that's not the rule. The rule is 8 points from the line, from the fractal. So if you are struggling, then you may need to change. And Brent did this last week. He kept getting stopped out, and he was trading minis instead of micros. And so it was $100 here, $200 there, because it was going against him, and he didn't have his stops in the right place, and either would move his stop and got killed because he moved his stop, or he wouldn't take one profit out for 2 to 3 points, and his stop was too close, and it kept going, but it would stop him out, and then it would move without him, so now he only got a 2-point trade. because the other two lots that you had got stopped out because the stop was too close. Putting your stop up here where your break even, quote unquote, is not the place to do it. You must put it here. That is the first hard rule, and the second hard rule is you must take some out at 8 and 10 and then leave a runner on the last one. The third hard rule, period freaking dot. You never move your stop lower. The only place it can go is higher to trail. Never, ever, 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 ever. Your stop is never more than 12, and once we hit 8 points and you bring the stop to the fractal or to the line that you are trading off of, to the paddle that the ball's bouncing off of, you leave it there. Once price continues to go up, then we're going to get into trailing, but I don't want to talk about that right now. I just want to show the rules of getting in. So now in this case, you got in here, you legged out at 8 points. So if you got in right here, you legged out at 8, okay, now you have 2 lots left. Now the line goes from 8 points to 12 points. Oops. Let me get that line out of the way. Now you go to 12 points, okay, and you must leg out of 2. Notice that 12 points in general, 12 to 14 points, is usually the opposite yellow line, the opposite 4. What I have said to you before is that you will learn to see this well enough that when you combine all the confluence, some of the trading you're going to do, you're actually not going to leg out your first target. Instead of 8 points, you're going to wait till it hits the opposite 4. I'm going to show you the situations in which this occurs. And then I might not leg out my second option until the second line, the 6. Because that might give me 14 points and 16 points instead of 8 and 10. But for you, at the beginning, wherever you get in, you must leg out at the first 8. You must leg out at the second 10. And if that is only, okay, if that is only 2 to 5 points on your first 2 entries, 2 on your first one because you're taking it off at 8, your second one's at 10, that's 5 points on that one. So now you're getting 5 to 8 points only on a trade. That is still better than getting stopped out or having to go against you and losing everything. We can take 3 to 5 points all day long on 20 to 30 trades. Let's just assume we only got 5 points per trade, okay? And we had 20 trades that we got 5 points off of. Somebody tell me, what is that? 5 times 20 trades is how many points?
100.
100 points. Okay. A micro is how many dollars per point?
2.
Okay. So if you got 100 points on the day at $2 a day at $2 a point, that's how much money? 100 points times 2.
That's $200.
Okay. So you just still made $200 only making on this system 3 to 5 points off of this kind of trading, sticking to our very strictest of rules, our most conservative of rules. All right. Now, let's just say we got 78% of that because that was the win rate times 78%. Okay, that's $156. So worst case, you're getting $156 playing ultra conservative, taking it out at 3 points from where you entered, 5 points from where you entered on the second one. Oh, but well, and that's conservative because we're not even talking about the third one or runners, okay? But does everybody understand the concept of where you're getting in, where your stop is, where your stop moves, and where you're getting out in relation to how fast you're getting in? Now, once you get more advanced, you might do something like what I do. I see certain lines, and my eyes are fast enough now that I can see the bounce of the candles. And so when I see the bounce and maybe the wick, I may be able to get in on my trade, okay, down here. And then I see the fractal develop. So maybe I go 3 micros when I see the bounce. And then I see the fractal, which gives me the confirmation of learn to earn on the turn. And then I might add another 3 right there. So now I've gone from 3 to 6. Now I'll leg out at 8 or 10, 2 of them. Then another 2 at 8 points. Now I've taken off 4 out of 6, right? I now have 2 more to use as runners to the 12 points or the 20 points or whatever. I'll show you some stats, some information on runners and what it can do for you here in a few minutes. But the basics and the mechanics. Does everybody understand the mechanics of the entry? Within 3 points of the line, you get a fractal, you buy. You leg out the first lot at 8 points from entry of the, or from creation of the fractal. Or use the line and use the markers over here to help you calculate 10 points. And just get out there. Then leave the runner for the third one, and you'll be able to go further. Take runners for longer. Now, in this case, let's just keep going with the rules. In this case, the second one, so the first one we got out at 8. Second one we got out at 10. Okay? 8, 10, and then 12. So now we could have got out our third one. Once I teach you to go further on that last one, like putting that target out at like 20, maybe 30, you might be able to take this all the way to get to 17. But for today's sake, for argument, and for black and white statistics, we're going to say this was a valid trade setup. Valid entry, valid trade, and we legged out for 8 points, plus 10 points, plus 12 points. So how many points total potential is that?
30.
Okay, so 8 plus 10 is 18, plus 12 is 30 points. So now you put in the right-hand column, trade number 3, 30 points. That is the potential off of that trade. I can't control when you get in, so we're just saying what's potential here. You may only got 3 to 5 of it, but by strict as the rules, just like I said, I'm going to call this as invalid, I'm going to call this as valid, and I'm going to give you that this is going to be 30 points. Now on this one, let's go back to number 2. Okay, number 2 said we have to leg out at 8 points, and at 8 points is when we bring our stop to break even. So that means that on trade number 2, right, we didn't move our stop yet. So now, okay, let's say you had your stop down here at 12 points and you got stopped out on all 3 lots. How much did you lose? If you didn't just go stop, flatten all. You just actually let it ride against you full 12 points. You lost 30 points because all 3 of you wouldn't legged out of one yet. And you would have let it come all against you. Now, hopefully everybody in here is skilled enough to know that if you've got an entry here and it bounces up and it's coming against you and it's slicing down through you, you're not going to just sit there and watch it go 12 points against you. But for black and white rules, we're going to say you lost 30 points on that. So now minus 30 has to go in the right-hand column of trade number 2. So we have 1 no trade. We have 1 trade that we took that wasn't a successful trade, unsuccessful, and we have 1 trade that was successful. So we've got a total of 2 trades. Now, what do we do from a rules point of view for finding the next viable trade option in here? I'm looking for either the next big line below this one that I got in, or I'm looking for the next line above the 10 up here. So I'm looking for the 15. Now let's just talk common sense for a second while we're here. If you see lines, okay, let's talk about the lines development a little bit so you understand them. These lines are horizontal, okay? They're not vertical. But look at what happens with these lines here. As price bounced off on this 4, all of a sudden I'm getting a very vertical 6 line here. Okay, that's shooting down. When you see that the lines are close together and they are going vertical, that's signifying that you're having an impulse move. The more vertical, the tighter together two lines are together, then the more vertical they are. You can see over here, look at this example. Look how far the spacing is between the 4 and the 6. Okay, you see that area right here? The 4 and 6 are very far from each other, and they end up being, quite honestly, vertical lines as it develops. As price comes back to hit it, it's vertical. So you can tell by the shape of the line sometimes what price action is doing. And in this case, hopefully common sense, with the speed at which you see this drop, the changing of the red background, the verticalness of the 4 and 6 together, you wouldn't sit there and be saying really to yourself, oh, this looks like a buying opportunity. Hopefully you're saying, let's have some patience, and we're going to look more for doing what? First touchback of a bear line to continue the selling in the direction of the trend. And that's what we want to get you to. The concept of is seeing the forest through the trees. Yes, these are the strict rules, but we might ask ourselves, would we really want to take this trade? Because what this trade actually is, even though by our strictest of rules, it's a counter trend trade. And we would like to not take counter trend trades unless we have to, because we want to stay in alignment with price structure. And if we do a counter trend trade, we may just do 1 micro, maybe 2 micros. If you're somebody that has 15 because you got $5,000 to play with and you're experienced, maybe you only take 2 out of those 15. So we want to get to the point where we bring judgment into the decision tree process. I'm showing you the black and white rules of what valid trade entries are, of what a successful trade looks like, but I want to put it in context with what price is telling you. There is a saying, okay, write this down, put this in your book of knowledge, all right? Time is a standard deviation, volume is a tell, and price is your arse. Price is everything. Price is price. I'm sure you guys have heard that from other traders. It is everything. If price is doing something different than what you think it should be doing, you have to disconnect what you think and what you feel and go back to flying instruments. Just like you're flying a plane in the weather. Pilots get this thing called the giant hand phenomena and some other things where it feels like they're turning, feels like something's making them lean to the left or to the right. But they go back and they look at their instruments and they're actually flying straight and level. But they've got that feeling that they're turning. They got that feeling that the market's going to go down. They got that feeling that the market is going to bounce and go up. This is a set of rules to fly instruments off of. If this, then that. Then you start bringing in your spidey sense, your pilot intuition, and you start learning what other cues are, what other clues are to build the picture for what's going on. So now, in this case, just from a perspective of this chart, we start to see 4s and 6s developing that are continuing on for longer. Over here, we have broken 4s and 6s in this kind of sideways consolidation chop. 4s and 6s, 4s and 6s, 4s and 6s, 4s and 6s, 4s and 6s. And you can see I drew actually a rectangle here that said, hey man, we're just in this chop zone. We got to break out of high, low, this sine wave inside this range-bound trend. From a common sense point of view, if we're trading from 635 over here to 710, and we finally break out of this range to the downside, I see myself go from green candles to red candles. I see myself go to a red background. I see bearish lines now all starting to develop closely to each other with a nice vertical pathway down. This is telling me that I've turned into a bearish situation, a negative momentum. Price is going down. Oh, I also have a cloud in here. This is called a fair value zone cloud. It's going from thin to kind of a little bit wider, thin, a little bit wider, a little bit thicker, thin, changing colors along with the color of the candles inside my chop zone here. So now from a technical analysis, from a spidey sense point of view, a trader spidey sense point of view, I'm like, hey, I'm breaking out finally out of this trend, and I'm getting all these bearish lines, and I have everything's red. Red over red, you're dead. Red candles, red cloud, red background. Do I really want to take this trade? This is where you got to use the other pieces of the puzzle to say, yeah, I either don't want to trade it, or I'm fast enough where I'm going to only try to get 3 to 5 points, and I understand I'm not going to get very much out of this probably, because this fair value zone is extremely wide right here. It's gone from skinny to wide. It's gone from green candles to red. So again, counter trend trade. Let's try to add some technical analysis and some big picture analysis to whether we want to take that counter trend trade. Sticking to the rules, what's the next line below me? The next line I could buy is down here, and the next sell line is still the purple line. Sorry. Okay. So what trade are we on right now? Somebody tell me.
Number 4.
Okay, my chart's got to catch up with me here. Okay, trade number 4. So, next line, playing ping pong, ping pong, ping pong. Oh, ping pong. Here's the next place I can take a trade. So, what color are my candles? What color is my background? Red and red. Have I ever, in all of this time frame so far, from way up here to down here, okay, I'm at 50 points later. All we've done is bounced off the 4 and never even tagged the 6. So now you have to ask yourself, what if you were to draw a trend line, okay, on price, maybe on a 1-minute chart, and you're just sitting here and you're going, man, this is just like straight down. Do I want to take another counter trend trade? Maybe not. But let's stick to the rules of the trade. Okay? The rules of the trade say that that is a valid trade entry because I'm within 3 points of that line. So now, from there to 8 points, I would leg out. First lot. Second lot, I'm going to go to 12 points. Puts me right about the opposite 4 bear line. And then I could potentially ride it all the way up to 16 points. Yeah.
Oh, this is not out. Now you say we can enter within 3 points of the line, right? Is that could be above and below?
Yes. Yes. Plus or minus 3 points of the line. Because we know that depending on the 1-minute ATR, right, you can have some overshoot on the NASDAQ. We know we can have some overshooting. It happens all the time. It's the same reason why when we're looking at Fibonacci's, when I teach you the Fibonacci retracement, the ES, for example, almost always first bounces or honors the 61.8% line. But the NQ is a little wilder and has a little more overshoot capability because of its volatility. So we know it can overshoot certain price ranges. So in Fibonacci's, I use 65%. I may use 61.8, but I give it to the 65% knowing I can overshoot. Same thing with these lines. We know we can overshoot a little bit and still bounce. So I'm watching it. I'm watching it hit here, and then I'm going to watch it to come down. Well, if I see it come down just minus 3 points here and get a fractal, I'm like, yeah, that's the first touch. This is a long distance without getting a really good bounce. So I'm going to say I might take this counter trend bounce. I'm still red over red, I'm dead type situation, so I'm conservative. I've never gone above the 4 line. I've got this channel that's extremely vertical down. I got a trend line that's, down. I'm using basically the 4 line like a trend line. And if I just keep seeing it bounce 4, 4, 4, 4, 4, then I know I'm in a very bearish state. Okay. So now, though, I want to look for the first big excursion. Well, in this case, first bounce again. So now we're trade number 4, right? We have obviously 8, 10, and 12 points. Where was your stop supposed to be? Your stop was supposed to be minus 12. Okay. Down here somewhere, when it hits 8 points, what do you do with your stop? You bring your stop right below the fractal. Okay? Right below the fractal. So that's going to be like right here. Right? Right there. That's where your stop is. Once you hit 8 points. Now, the second point of the stop is once you hit 10 points. Once you hit 10 points, we haven't talked about this. I want you guys to bring your stop to one of 2 places. It is to break even or the next fractal below you. And this is actually going to help with taking losses. Because at 8 points, stop comes to break even. At 10 points, at 8 points, stop comes to the fractal or the line. At 10 points, you come to break even. If you're having difficulty with the trades going against you because you're taking too many counter trend trades with too large a size, that's how you handle it. The stops go to the entry point, the start point of the trade at 8 points, and at 10 points, it actually comes up to your entry point or break even. That way, if it then does come up 16 points and it happens fast and it comes back against you, now you're break even and you're not losing. You're an automatic no lose trade on that. Okay, trade number 4, you put in the column 30 points to the right. Okay, we're going to keep this one. We're not going to count runners on this trade. I'm going to show you why we'll count runners on the other days, but for right now, we're just going to 30 points on that. So now we're 30 points. So now, next line, first touch after this. What is it? Well, it's still the purple line above me until 725. 725 is over here. So I can't take anything on the 10 yet until after 725. What's the next line below me? Well, next line below after that trade is here. Well, price is slicing through it. Do I get a fractal on the line? Plus or minus 3? No. No trade entry. Next line down. Price is slicing below it. Do I get a fractal on the line? Plus or minus 3? No. No trade entry. Price is bouncing. Where's the next line below me? I don't know. I don't see it on the chart right now. So the next line above me is the 4. Can't take it. Next line above me is the 6. Can't take it. Next line above me is the 10. Can I take it? Price comes up. Slices through it. No fractal on the line. Therefore, I'm not taking it. Next trade. Fractal on the line. Can I trade that? Yes. So here we are. We'll add trade number 5. Does that trade go 8 to 10 points? No. Okay, so valid setup, not a valid trade, unsuccessful. Now, here's common sense again. We have dropped now. Okay, we have dropped now from where we went negative up here. We have dropped 103 points. What's our daily ATR on average for the last 10 days for the NASDAQ? Last 10 days, what's our daily ATR approximately? Some of you guys already did the homework. You knew it. Let's just say it's 250 points, okay, on average. Last 10 days from the low of the NASDAQ to the high of the NASDAQ on a daily time frame, okay, has been 250 points, roughly. If I have dropped Now we're bringing some technical analysis, some spidey sense thinking into this. If I've dropped 100 points pretty precipitously, taking the elevator down, staying below the 4.6, 4.6, 4.6, 4.6, okay? And I'm getting down to an hour now after the trade session started. Am I going to start thinking that we're going to go another 100, 150 points down and go straight down for the first daily ATR? Probably not. If I'm seeing my bigger lines, my 60, my 75, and my 85 lines here, I'm going to start thinking I'm going to probably start to see a reversal pretty soon. Because I usually don't see a one move fulfill the entire daily ATR on a normal day. Now, granted, we can have a news event like FOMC or something that can move us 200, 230 points in just a couple minutes. But that's not the situation we're talking about. So you're adding all the pieces of technical analysis to this picture with how you're trading. And if I go, yeah, I've come down 103 points already, and then I go into a consolidation period of time, what does consolidation usually mean? It usually means one of two things. I am either going to come down and move my first initial move. I'm going to have a pullback flag type pattern. And then I'm either going to have a continuation of the trend, or I'm going to come in here and I'm going to have a little consolidation period in here after this first bounce. And I'm going to start doing, right, bounce down, bounce up, bounce down, and I'm going to either continue down like that, or I'm going to continue up like that. So this is where we get into the technical analysis of W's at the bottom and M's on the top. We look for a rectangle consolidation pattern, and we want to find a Wyckoff spring out the top or out the bottom of the rectangle, the consolidation period. If it was an ABC pattern, maybe 50 points down, 20 points up, another 50 points down, that might be an ABC pattern down, or a flag continuation pattern, or a down consolidation for my B part, and then the C leg comes down, A, B, C. A consolidation, Wyckoff spring down to finish the rest of the move. 1, 2, 3 move, A, B, C move. But I moved 103 points already. So, and I'm at my 85 line. So I'm like, okay, now and we break down here, and we don't keep slicing through. I start getting this consolidation. What do I say to myself? Self, this might be a place where I'm looking for this type environment. So then I'm going to draw. I'm going to let it be smart. Remember, we do not pick a falling knife, and we do not catch a falling knife, and we do not catch a shooting star. If we had no more price down here below us, when can I actually learn to buy? Well, I want to learn to earn on the turn. I want confluence. I want structure to tell me, yes, it's time to start buying. So I'm not going to pick bottoms and just buy a fractal below this for no reason. I'm going to be patient. I got 20 to 30 trades a day potentially that I can have. Most people are wanting 20 to 50 points a day on a good day. We know we get hundreds, if not thousands of points a day using our system. So we're not going to let greed or poor judgment have us catch a falling knife. So what do I want to see? I want to see structure tell me that we are shifting from a negative momentum to a positive momentum. I have a couple things that show me that off of this system. The first thing is I'm seeing these 60, 75, 80 lines come into play. All right. I see some kind of stopping of the elevator down below this 85 area. I see myself starting to consolidate. And what am I looking for in the consolidation now? I'm looking for bullish structure to start to develop underneath me so that I can start looking to buy. So now, I'm going to just shrink this just a little bit to actually be the right size of where the bottoms are really starting to occur here. Okay. Now, if I'm thinking from a Wyckoff point of view, I'm bouncing, I'm bouncing, I'm bouncing. Now, I don't know whether it's going to continue on down or whether it's going to bounce up. But I have an idea that since we've hit these lines, since we've gone over 100, and my Navdar system, quite honestly, for those who've been in here for at least a couple weeks, know that I'm going to tell you when I'm going to see a shift from a downward momentum looking for a low to start looking for a high based off of algorithms. So somewhere in here, I probably started telling you, okay, we're going to find a bottom and we're going to start looking for now the AM high. So now I'm looking Wyckoff, Wyckoff, Wyckoff spring, bounce, 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 bounce. Now I finally get an impulse move from the bottom of this rectangle and it takes me out the top of this rectangle. So I say to myself, self, I've dropped down over 100, 3 points. I've just consolidated down below the 85 line, which is the largest line we have on our chart. And now I'm starting to get some structural bullishness underneath me as support. And now I see myself Wyckoff spring out, and I see I go from red candles to blue candles. Do I want to sell this 10 line, which now is at 725, so I can take the first touch? Well, number one, by our strictest of rules, we are not developing a fractal on the line. So that would not be a valid trade entry. The second reason we would not do a valid trade short here is because we know, okay, we know that we have now Wyckoff springed out. And a lot of people teach, hey, see consolidation, and then maybe buy the breakout of when you see the consolidation. So some people teach consolidation breakouts, Wyckoff spring breakouts, and they teach there. If you're a member of more conservative rooms, okay, places like Bookmap Academy and other places that have trade rooms that they teach look for the consolidation, okay, and this is what they teach right here. They want to see consolidation, impulse move up, a retrace less than 50% of this line. So if it retraces less than 50%, then they teach buy it when you break out above the impulse move. So they literally do not buy in those more conservative rooms that teach this flag consolidation pattern. They say buy the breakout once the price candle shows you that it's now breaking out above where the original impulse move was. So they're looking for an A, B, C move, but they don't want to buy until all of this is done and you see this consolidation here end. So they are actually getting in here. I do training webinars for Bookmap. This is what Bruce at Bookmap teaches, and he and I have had many conversations about this because he's like, Crash, I don't want people catching a falling knife. I don't want people catching a falling knife. I'm like, I don't want people catching a falling knife either. But there are ways to find lows or structural setups that we can take without having to wait. I mean, look at how many points these guys are missing. And this is why we catch hundreds of points where other people are catching 50 points, 100 points max a day. They're waiting 50 points before they get into a trade. I'm sorry, that's not the way Crash Alton is trading. I'm not giving up 50 good, perfectly points when I got a system that is going to sit here and show me how to get into trades based off a structure with a 78% win rate. I'm going to get 50 points before they ever get in. So now, looking at our strictest of rules, where's the next line that we can trade? All right, let's go to that. What trade number are we on, Bill? Anybody?
I got lost at 5.
Okay, I think this was 5 down here, wasn't it? Pretty
Yeah, I think we're on 6.
Okay, so that was 5. Sorry for the technical analysis lesson here, but I want it all to come together. I want you to see the forest through the trees. I want you to understand what the spaghetti is telling you. So now, Here's a next line in order. After 725 is the 10 line. We can take it. No. Invalid trade setup. Here's the 15. Can I take that trade? Yes. I got a fractal on here. Part of why I went into this discussion is because I want you to understand what we just went through and ask yourselves, do I really want to take that trade here? You may or may not want to. Now I see the structure developing below us, the 4 and the 6. So Crash might say, hey man, I am now more interested, even though I know that this line is here, and by the strictest of rules, that is a valid trade entry for us. I want to wait for the first pullback to start buying. But let's keep it black and white for now. Let's assume we're doing Isnipe for dummies. We don't have any other influences in our decision tree other than the rules for Isnipe. Okay, let's do that. So now we sit here and we take a trade here. Does it go 10 points? The answer is very easily no. So now you have to ask yourself, are you smart enough that once you see it bounce here and then start coming against you, even though your stop is up here at 12 points, are you smart enough to hit flat and all when it comes against you? Or do you just sit there and let it come down to 12 trades, 12 points against you? But let's just analyze something for a second. Let's put our stop at 12 points from where the trade is supposed to happen on the line. Ooh, that's pretty close. Would you have even gotten stopped out if you put it at exactly 12 points? Just barely would have potentially gotten stopped out. Maybe you wouldn't have. So now let me ask you a question. By our strictest of rules, did we end up from this line coming to a point where we could have made some money? Man, that's close. That's like 50-50 on whether that stopped you out, on where exactly the 12-point stop was. I used to teach 12 to 15 points, okay? And for those who don't know it, we used to teach 25-point stops for those who had larger accounts. And the reason we taught 25-point stops is literally 25-point stops had a 90 to 92% win rate. And this is the exact reason why. Because if I put a 25-point stop from here, okay, I'm up above the next line that's in order, and we see that if it doesn't stop on one line, it'll probably bounce off the next one. And so we were still getting, okay, the ability to have the ability to catch, okay, 8 points, 10 points, 15, 17, 22 points from this point, because it didn't come back below 25-point stops. Yes, we jostled. We did some back and some forth, but the statistics on back testing actually say it's a 90, 92% win rate with a 25-point stop, because you will end up getting at least 10 to 12 points out of it. In this case, you're literally getting 23 points from the point of entry, but because most people have the smaller accounts that we are trading, these 25 and 50s that everybody's doing, I tightened up the rules to be 12-point stop, have people come out at 8, 10, and 12 points so that they get a little something and they don't risk quite as much on the stop point of view, because most of those accounts can't handle doing a 25-point stop. So, in here, this is a really difficult one to say. It's kind of break even. So I'm going to actually call this a push on whether we would have gotten stopped out at 12 points or not and had our thing. So we're going to not count this trade for us or against us, just for that reason. Okay, so now let's look for the next valid trade setup. We know that the next line below us down here was the thicker green. Oh, but wait, now I've developed a 4, a 6, a 10, and a 15 for support. Now what's the next line above me? Well, it's this cream line right here. So now I'm looking for a trade for the cream line, the first touch here, or I'm looking for the first 10 below me. Well, coming down here, here's the first 10. is this a valid trade setup off of a 10? It's after 725. It's a 10 line. I got a fractal plus or minus 3 of the line. So the answer is yes. Valid trade setup. Can I get 10 points out of this trade from this fractal? Yes. This actually goes 16 points. So that is a valid trade. So this is trade number, Renee, what? 6?
I think, yeah.
6? Okay. Trade number 6 because we're negating this one. So trade number 6, valid trade entry, valid trade, successful trade, all right, for our 30 points. Now, what happens? I told you a lot of times I leg out at the opposite 4, 6, and 10 line and try to let it go for runners when I'm trading myself as an advanced sniper off the system. So if my stop is down here at 12, okay, and I'm patient enough to wait for it because I've Wyckoff springed out of here, my AM turn is telling me I'm going from low to high, I might have a little more patience with this. Or maybe I do this. Maybe I go to the advanced setting of first and second touch rules, which you are not doing yet. But this would be an example of a first and second touch, where I would get in, I would leg out 8, 10, 12 points. When you guys hit 8 points from here, what do? You bring your stop to the fractal. Now, if this came against you, worst case is you got out 3 to 5 points from where you got in. It came down to your stop, and you lost nothing. You only made 8 points. Now it comes back down, bounces back up. Me, Crash, playing this, understanding everything I've just talked through, I would probably see this bounce with this red candle down, bounce up again, come down and see a fractal develop. This is now called the right-sided pivot rule. This is telling me that I'm having, to the right side of my low, I'm having a higher low. So by the right-sided pivot rule, which some people trade when they're sniping, they'd say, oh, I'll buy that, and then they leg in again. So now I'm combining a right-sided pivot rule with my second touch rule in this area of this 10 line. I might buy again right here and leg out at 8, 10, 12 points, or 8 and 10 points, and let a runner run up to the next line or some other structure point. Maybe I'm able to bag 30 points off of that system. Okay, so this is where I'm starting to show you where you start getting to the point where you're a more advanced sniper understanding this system. You'll actually really start to make significantly more money. But we're sticking to the conservative rules for right now. So in this particular case, you got stopped out. So on trade number 6, you got, I'm going to say 18 points because the last one came against you. Oh, wait, how many points did that go? 8, 10. Okay, so now at 10 points, what am I telling you guys to do? Bring your stop to break even, right? At 8 points, I'm telling you to bring it to the line. At 10 points, I'm telling you to bring it break even. So now, in reality, you guys would have gotten like 3 to 5 points. So maybe 8 points total. All right, so we'll just put 8 points over there in the right-hand column. No losses because our stops would have stopped us out. Now I'm looking for the next line. Well, I tagged the 10. What's the next line I can get tagged below me for a buy? It's the 15 line. Okay, by the strictest rules, what's the next line above me I can sell? It's this line right here. So now, first touch, my stop is at 12 points. Okay, I want to leg in, leg out. Okay, that's like 8 points. So hopefully, maybe, probably not. Probably wasn't fast enough to leg out. But where's your stop? If you can't even process that's 8 points, you probably still have your stop at 12. Even if you do bring your stop down, you brought your stop right on top of the fractal. So now the question is, depending on the person and how much guts they had, did they bring their stop right above the fractal and would this have stopped them out? Or did they stick to our rules and they let it continue to run? So it's a valid trade setup. We go 8 to 10 points. By our strictest of rules, our stop came to this line right here. This would have stopped us out. So now we got another 3 to 5 points. We got 8 points off of that. Even though it went further. showing you the most conservative rolls. You only got 8 points out of that, but showing you what you'll get to is you'll end up seeing that maybe you'll pull your stop a little bit later. Maybe you wait to the opposite 4 line. So the way Crash Alton trades this is what I do. I'm fast enough on hitting the flat and all button that I may visually bring my stop to break even, but I may not actually bring it physically to break even. So if my stop is here at 12, maybe I just leave it up here at 12. This is a 20 line. The 20 lines are the most important line of the entire chart. So I know that I have a 90% chance of going to the opposite 10 line when it hits a 20. So the way I trade this is I sit there and go, stop here. Yeah, leg out at 8. Okay, I'll leg out at 8. Actually, I don't leg out at 8. I leg out at the opposite 4 line. Okay, so the first place I leg out, doggone it, sorry, is at the opposite 4 line. But for you guys, you cannot do that. But again, I'm showing you what you're going to be able to get to, because now I leg out at the opposite 4. That's target number 1. For me, target number 2 is the opposite 6. My third target rests on the 10 line. If I think it's going to go shooting down below that, I will actually move my target so that maybe I can make more money. For you guys, 8 points off of that one stopped you out because you had to bring your stops at break even if you were even fast enough to do that. So, got 8 points on that. Now, what's the next trade that I'm looking for? Well, it's the next line above the 20, or it's the next line above the 10, which is the 15. So let's move price to the right-hand side. So the way I trade, off the 20, I would have held runners up to at least the 10. So I would have gotten, on my last one, I would have gotten at least 30 points out of that trade. Because I leg out at the opposite 4, opposite 6, and I try to hold a runner to at least the opposite 10. Particularly off of a 20 line. 20 lines are the most important line of our entire system. They're the ones that provide the biggest bounces. Especially in combination with like the Eagle trade. For those of you who know what that is, the Eagle line over on the ice structure chart, you can get a 60, 70 point move like nothing. And where did this actually end up going? If I had entered in here and I had a 12 point stop and I do it the way I do it, right? I could actually hold a runner and continue to leg down and leg out, waiting patiently, and this 31 point trade actually could end up coming all the way down over to here as I write it, and now I'm turning something into a 50 point trade with zero risk of getting stopped out. Zero risk of getting stopped out. Because it just continues to trend down. Yes, back and forth, back and forth, back and forth, but it's trending down. This might be a case where I'm like, hey, here's another 10. Do I really want to take that trade? No. Do I really want to take this one? No. Maybe I have 6 to 7 runners still left. I may just let it bounce around and continue to move down instead of taking this trade down here. But let's stick to the strictest of rules for today's sake so you understand the system. What trade was that now, Renee? Was that 7?
I think Renee jumped off.
Oh, she have to get off? Okay.
I've got...
Anybody can leave whenever they want. I'll just keep talking as long as anybody stays here. The last person says I got to go, I'll go. So now, by the strictest of rules, we come down, we're looking for the next line. Is this the next line? No. Is this the next line? No. Is this the next line? Yes. Because it's the next 10 in order that I can take. So now I take this trade right here. Okay? 8 points. My stop comes to the fractal. To the fractal. So in this case, here's a perfect example of how you could get more points by letting the system continue to trade for you. You're down here at minus 12. When you hit 8 points, you don't bring the stop to the line. You bring it to just below the fractal. So now, even in this little pullback against you, your stop's right there. You already made 3 to 5 points, hopefully. It comes against you. You didn't get scared out. You got a little bit of profit, and you're trusting the system. Now, where does price go? Now it ends up going up here another 13, 14 points before it would come against you. You would have gotten your full 30 points out of there. All right, let's actually break here and let people ask questions. What questions does somebody have at this point in time? Nobody has a question? JC? Rich? You on? Oh, he's recording this. Ron, you're new. Are you on here? Still?
Yeah, I'm still on, yes.
Okay, Bill's still here. All right, Bill. Does this make sense to you on where you're entering, where you're putting stops, where you're legging out?
Yes, and it's definitely seating in. The rules are sinking in deep.
Okay. You just have to go over it, several times to see the forest through the trees, to see what line is next. What line is next? Where am I putting my stop? The stop is so important. Stop is so important. Patience is so important. Not letting fear or greed control the emotions is so important.
Could you possibly bring up your ATM and show us, when you say you're legging in, legging out, you go for long price changes, large price changes, and how you actually do that? What the mechanics are, on your ATM?
Yeah, how to create it.
No, not how to create. I know how to create the trade setups, but it's what buttons are you put? You've taken a trade. It's going in the direction you want it to. You let it take the first two on its own, pretty much, and then you say you legged in.
Okay, I'm not legging in right now. These are not leg ins. This is no dollar cost averaging on this kind of trade. Legging in occurs later on in a more advanced sniping system. For example, let's say over here. Okay? Legging in for me would mean I see price consolidation starting to happen. And my Navdar clock is telling me I expect now a move to go from an AM low to an AM high.
Right.
So I want to do something called price discovery. Price discovery. I'm testing the waters. After I see this starting to bounce a couple times, somewhere in here, I'm going to test the waters. I'm going to do price discovery. I'm going to see if I can get in down at the bottoms while other people are waiting 50 points later to get in their trade. So if I'm able to see one or two bounces and I start seeing a rectangle develop, I will start to leg in, meaning I will start to buy 1 to 2 micros right here to see if this is now the point where I get this big breakout.
At what price are the two micro set, or how many points are they? Like 8 and 10 points?
Yeah, it's still the same thing. 8, 10, and 12.
Okay, when you get to the last, say the first two, the 8 and the 10 win.
Yep.
How do you push the 12 up without? I've tried it. I've tried pushing my 12 up as it went up, and as I pushed it up, either it's taken it, completed the trade when I didn't want it to,
yep.
or that's typically what happens.
Okay,
pushing it up,
yep.
And suddenly the trade ends along its own.
Yeah, so this is how you handle that. You put your stop at 8, 10, and not 12, but 20 or 25. And then, because what can happen, let's just say you leg out at 8, you leg out at 10, you start to get to 12, and you see it starting to reverse back down at 12. You can just go flat and all. And that will
that's the problem I'm running into.
Well, that will take your last one out, wherever price is on the last one. Or if you put it to 20 to 25 and price starts doing this impulse move up, hopefully you have enough time to click on that last line target and then move it up. But it's got to be far enough away that you have time to move it, or you could even bring the line down. So
it's in the moving process that something goes wrong. I don't know. Like I said, it's shaped like a rectangle with a thin line that goes to the right. I'll click on that rectangle, click and hold, and I'll start moving it up, and then suddenly everything disappears.
okay, let's look at something here for a second.